But let's understand a little bit more about the market, where we can expect the market to head in the near term, what has been working, what's not. Let's understand all of this and more with Mr. Pashupati Advani. He's joining us on the show right now to help us understand a little bit more about the market texture at present. And Mr. Advani, hi, good afternoon, and thanks so much for your time today. Help
Good
us
afternoon.
understand what you're making of the market right now in terms of how the earnings have shaped up so far. The first half of the earnings season was not that good, but of late, the last couple of sessions or the last 3 to 4 sessions, we've seen good moves coming in.
Well, traditionally, we've had the companies that have sort of good earnings try to come out earlier, and then the ones with indifferent earnings have come out in the latter half of the month. This time it's been the reverse, where the worst ones have come first and the better ones have come towards the end of the month. And that's given a little bit of sort of push to the markets, and that's made everybody happy. The reality is, I think, a lot of this is temporary because, are we really in a position to be able to absorb a 25% tariff hike into the US? Which are the companies that are benefiting? Which are the companies that are going to get hurt? And people are just having to look in those and then try to figure out which ones are going to do well and which ones are not going to do well. On my side, actually, I feel that IT stocks should be under pressure. Unfortunately or fortunately, today they are the active winners with TCS and Infosys up there in the top part of the gainers. So I think that, but I think that's temporary because I think the model is having to be changed. And I don't know whether these two can actually lead the others and make the model change so that people will be able to benefit because of, and that's got nothing to do with the markets. I think that's got to do with the way AI is coming and the way Microsoft and Google and OpenAI are actually changing the world. And that's here to stay. So that's it.
Coming in on the markets, and yes, the select IT counters rather are doing very well. But Mr. Advani, in this market, select underperformers are also holding up well. Case in point being autos, case in point being the staple companies. And of late, especially in the near term, the news flow regarding the market share gain, the earnings, they are boding well. But do you trust this move for a good run-up from these levels from an investor point of view? Should one really bet on these themes right now?
Well, the reality is the government is continuing to spend to stimulate the economy. So obviously, they're going to continue in infrastructure, real estate, roads. So those companies that benefit from that are definitely going to be in the space and will be the ones to buy. Again, our pharmaceutical companies are doing okay. We seem to have got some reprieve from the US because a lot of the pharmaceuticals are considered to be essential, so they've been not on the tariff list, or at a much lower tariff. So I think that's good for us. One of the things that people haven't noticed so much is that US used to have this small ban on small packets that used to be sent by post into the US, and a lot of pharmaceuticals were coming second sale from Canada and from Mexico into the US. I think that is now stopped, and that's going to have some effect, but it's not really going to have an effect that is going to be meaningful because our pharmaceuticals can go straight in. So I'm really bullish still on cement, steel, to some extent infra companies, which I think are changing down. And I think even though big pharma in the US is getting attacked by the US president, I would consider our pharma companies to be small pharma. So I think we're able to slip in, and as generics, we're able to do well. I think those are all great things that are happening for us, and things that are sectors that are definitely going to be interesting for us in India.
Okay, so that's the take on that. Let's move